Nearly 3 weeks into U.S. and Israeli strikes, Iran expanded its retaliation on Friday, firing directly on critical Gulf energy infrastructure. 2 waves of Iranian drones struck Kuwait's Mina al-Ahmadi refinery, a facility capable of processing 730,000 barrels of oil a day. Eruption immediately hit natural gas supplies. Following missile attacks on the Ras Laffan industrial hub, Qatar Energy reported a 17% reduction in its capacity to export LNG, or liquefied natural gas. This creates an immediate problem for New Delhi. India sources roughly 47% of its total LNG imports from Qatar. Supply drops there directly threaten domestic fertilizer, steel, and power sectors. By destroying active refineries and storage hubs, a regional military standoff has instantly translated into a severe global supply crisis. This tracks the immediate market reaction. Brent crude surged near $119, easing to $106.67. WTI fell to $94.71. Expanding this reveals the domestic impact. As crude spiked and capital flowed out, the rupee tumbled to a record low of 93.70 against the dollar. In response, the Indian government opted for targeted fuel revisions. Industrial diesel prices were raised by 22 rupees a liter and premium petrol by 2 rupees, pushing Indian Oil's XP95 to 101.89 rupees a liter in Delhi, while regular consumer fuel remained untouched. These input cost hikes arrive against a softening macroeconomic backdrop. Even before the Gulf strikes, growth across India's 8 core industries had slowed to a 3-month low of 2.3% in February. Sweeping industrial fuel hikes, a crashing currency, and slowing domestic output locks in a heavy inflationary squeeze on India's FY27 GDP growth. The volatility is heavily splitting corporate valuations. Great Eastern Shipping stands to profit directly from the geopolitical chaos. The company has placed its entire crude fleet on the spot market, where vessels are chartered for immediate single voyages. Current voyage-based spot rates are nearly double those of one-year leases, allowing the operator to capitalize on peak freight panic. Conversely, the broader tension in West Asia is souring investor sentiment, forcing startups like Rentamojo and PhonePe to reconsider or delay their IPOs, or initial public offerings. Domestically, another major disruption hit the biotech sector. Friday marked the Indian patent expiry for Novo Nordisk's semaglutide, a highly profitable molecule used in obesity and diabetes management. This comparative bar chart shows the aggression of the resulting price war. Competing pharmaceutical firm Natco immediately launched a generic variant priced 70% below the standard pen device cost and 90% below the innovator brand. Between sudden supply chain bottlenecks in the Gulf and fierce patent expirations at home, Indian corporations are being forced to aggressively rewrite their pricing models. Inside the courts, Chief Justice Surya Kant recused his bench from hearing challenges to the 2023 Election Commission appointment law, citing a conflict of interest, as the statute directly removed the Chief Justice from the selection panel. Concurrently, the Delhi High Court reopened a PIL, a public interest litigation. The petition highlights that the BNS, India's new criminal code replacing the IPC, entirely omitted a Section 377 equivalent, creating a legal gap for male victims of non-consensual acts. The judiciary also advanced labor rights, with the Supreme Court officially recognizing 12 weeks of paid maternity leave for adoptive mothers, establishing legal parity between adoption and biological caregiving. Politically, massive crowds gathered in Raigad to mark the centenary year of Dr. B.R. Ambedkar's Mahad Satyagraha, linking the 1927 Water Rights March to ongoing debates over caste, equality, and the Constitution. As the economy braces for external energy shocks, India's judiciary and political establishment remain heavily focused on foundational debates regarding civil rights and constitutional structure. Ultimately, Friday's trading data reflects a system managing deep contradictions. Looking at this final data dashboard, equity markets showed slight gains, closing the week with the Sensex at 74,532 and the Nifty 50 at 23,114. However, those numbers sit directly alongside Brent crude at $106 a barrel and a record low rupee at 93.70 to the dollar. While headline indices display superficial resilience, the currency plunge and commodity spikes confirm a global market operating under severe, prolonged stress.